Nike just dropped earnings, and on the surface, they look great. The market certainly thought so, sending the stock flying nearly 11% after hours. But if you peel back the layers, there are some real issues: falling revenue, shrinking margins, and a major slump in digital sales. So today, we're breaking it all down. We'll go over Nike's latest earnings, dive into the financials, and finally, we'll set a price target for Nike using my intrinsic value calculator. Let's jump in. Nike's latest earnings are a bit like winning the race after tripping at the starting line. Yes, they beat Wall Street's expectation when they delivered 14 cents per share in earnings, when analysts expected less. But honestly, that's where the good news ends. Revenue dropped 12% year over year to $11.1 billion. Gross margins also dropped, down 4.4% thanks to heavy discounting and efforts to offload excess inventory. And Nike's digital sales, they're down a brutal 26%. That's a huge hit to their direct-to-consumer strategy. But investors, they celebrated anyway. The stock jumped nearly 11% after hours on hopes that this quarter marked the bottom and things might finally turn around. However, management struck a cautious tone. They expect more margin pressure and even warned about $1 billion hit from tariffs. But they're also focused on cleaning up inventory, getting digital back on track, and slowly rebuilding their profitability. So while the earnings weren't great, the market still took it as a sign that maybe, just maybe, the worst is behind. Now, all of this is short-term news, but you have to step back and look at the big picture. How healthy is Nike as a business right now? Let's dig into their financials and let me show you why I actually like the company. Nike stock closed at $62.50, but after hours it's trading closer to $70, still a far way off from its all-time high of $170 in 2021. As you can see, over the past few years, it was being demolished by the market. They're currently trading at around 21 PE with a forward PE of 41 due to their financial struggles. Now this is what I really like about the company. Their market cap is $92.3 billion, while their enterprise value is $93.8, and their net debt to EBITDA ratio is 0.22, which is a really low debt ratio. Honestly, I like if a company has under 2.5, so 0.2 is just great. Another thing I love about the company is their return on invested capital, which is almost 18. This shows that Nike does a really good job at investing their capital. Now look at this beautiful graph of their revenue. It has had a couple hiccups, but all in all, it's growing really steadily. Last year, they did $51 billion, while in 2010, they did $19. Really beautiful growth. We see a similar picture looking at their net income, growing from $1.9 billion to $5.7 last year. Now this is a graph of their shares outstanding, and I can't help to admire it. They have been buying back their shares consistently almost every year. Since 2010, they bought back around a quarter of their shares outstanding, basically increasing your share of the company along the way. Looking at their free cash flow, it shows a similar picture as it did in net income. Good, fairly stable growth over the years. Now let's look at the analyst estimates. Analysts predict Nike's revenue to shrink over the next 2 years. However, they do see a turnaround starting in 2027. And we see a really similar picture when it comes to analyst predictions on net income. All in all, Nike looks like a solid company. Despite current struggles, they have grown steadily over time, have low debt, strong returns on capital, and are actively buying back shares. Financially, it's clear they are well managed. The main challenge is the short-term slowdown. But let's be honest, Nike isn't going anywhere. So now let's look at the intrinsic value calculator and figure out what Nike stock is actually worth. Alright, last year Nike's EPS was $3.73, and let's say in the next 5 years, as analysts predicted, they will struggle and they will only grow at 2% annually. And for the 5 years after that, they'll come back to the more normal 5 to 6% range. So let's give it a 5. Let's keep the expected return at 10%, and for the terminal multiple, honestly, in my opinion, Nike is a moat that deserves a higher terminal multiple of 20. I see Nike and Adidas for sportswear, as Coke and Pepsi for beverages. So, combining all the numbers, we can see that Nike might be fairly priced for a 10% annual return over the next decade. And in my opinion, these estimates are quite realistic. All in all, while Nike's earnings come with both positives and negatives, the company's fundamentals are solid. And as you saw, the stock seems fairly priced now for an expected 10% annual return. In full disclosure, I actually own a really small position in Nike, more of a screener, but ideally, I would like to see the price drop a bit more, maybe below $60 to get a better margin of safety. That said, I do believe that Nike will do well and likely outperform the market over the next decade. But if you're aiming for higher returns, you should definitely check out my recent analysis on Google. The upside potential there looks much stronger. You should be able to see the video somewhere on the screen or in the description down below. If you enjoyed the video, consider clicking the like and subscribe buttons. And as always, guys, thank you for watching, and I hope to see you in the next one. Bye.